morning, good morning, good morning, good morning, good afternoon, good evening. No clue what time you're watching it. It's morning over here. Animals are awake. They want their food. Plants, the farm is awake, wants its fertilizer. So I'm going to keep this very simple as we have tried to do for the last couple of weeks. On Wednesday, we have the FOMC meeting. And if you will go through your email, it has quite a little bit more text than normal. Uh, Again, you know, table is set for Jerome Powell to be the bad guy. I did not remember that we have a holiday on Thursday, Juneteenth. I did not remember that. I kind of thought it was a Joe Biden thing, but it's real. So, not offending anybody. I swear to God, I'm not offending anyone because I didn't remember it. Apologies. But yeah, Thursday's a day off, so that is going to put a little bit of a monkey wrench into trying to predict the future, which is what we try and do on a regular basis. The full moon happened there on June 11th, Wednesday. Timed it pretty damn well. On Thursday, when I sent you out your email about the bullish wave 4 dip, the top coincidentally came on Wednesday, the full moon. And we talked about the dip, where the dip would be going to, what the dip should be expected, because the only thing that we're going to stick with right now is the bullish view. Because 10% of anybody who does what we do here is all sticking to the bullish view. So we're going to go with the minority. Again, not offending anybody by using the word minority, but that's what we're going to stick with, is the minority, which is the bullish view, which we are finishing off wave 3 already. We are going into wave 4, and then we have a move up for wave 5, and this will be all of, as you see in your email, the forecast for where it goes. On Friday, like I shared, a little bit of a warning because we were not getting that breakdown after Israel started attacking Iran. On the ES, I shared you the image in your email prior to the open on how it looked to be as if it was an ABC and it could be the A wave, and where the B wave I would want it to be, which would be right up there around that 59.8775, didn't. We went higher. But the other drawing I have there of the A and the B and the C, and that was pretty much right where the B went to over there on Friday afternoon, as I put out that message right there around 11:56 in the morning. Top might be in, be careful. So, what do we get and where do we go? Well, simply put, we had a red week, and it is the smallest red week since the week prior to this. The week prior to this, we had a couple of 20 and 30 point range days as we were up there right below 6,100. And then this happened on the Wednesday right after it. Well, we had a 27 point move to the downside for the week, a 96 point range. Once again, 3 weeks now since Memorial Day. The one being less than 100 points, last week being less than 100 points. So you want to call this bullish, go right ahead. I wish you the best of luck. But we got a red close, so this is something that we do monitor quite regularly because of the consistency of seeing consecutive red closes, as well as those minus 1% moves. We did get a minus 1% move there on Friday on the SPX. As you noticed, you did not get a plus 1% move off of that bounce. However, tracking, again, got to look at all different things. Looking over there at the ES, you did already have your plus 1% bounce, and we were starting to hit into, hey guys, 60.26. How did it work out? Oh yeah, top might be in, be careful, 11:56 in the morning. So, again, bringing you off on that to the QQQ, which produced a red week. 2 green weeks in a row. Now you got a red week. And what did you get? You drop down minus 1.49% intraday. That's it. Nothing more, nothing less, and you closed fractionally below where the open was. Friday was a nothing burger. It really was. It was a big, fat nothing burger, even though you had all of these major headlines that were hitting out on, the headlines. On the IWM, though, a little bit more significant because on the IWM, you did crack the code. You cracked out of the 210s. Didn't get down below 207, but you did get into the close below 210. You do have, be very well aware, you do have 3 red closes in a row over there on the IWM, so you might want to give this a little bit of a breather before you go looking at the detail on the IWM in the email as far as what's forecast coming over on the IWM. Big minus 2% day as well. You kind of want to give this thing a little bit of a breather to, set itself back up. So I don't see anything that you need to be aware of as far as this JP Morgan caller that everybody's out there being experts about, because it's for the end of the month. It has nothing to do with OPEX. In fact, on Quad OPEX, which I'll touch on before we move forward, Quad OPEX morning, Friday morning, and if you are trading Friday, you do not want the AM SPX. You do not want it. You want to have the regular June 20th weekly, and I see absolutely no reason to get into these until the end of the day on Wednesday. So anyway, here we go. June 20th on the AM expiration, there is a major straddle. Big straddle right there at 6,000. Besides that, there is nothing whatsoever of any kind of big alarm of Gamma, Theta, Vega, Pasha, Lamborghini. There's fucking nothing out there. So if you want to go back and assume, okay, there's going to be a peg at 6,000 because that's where all the volume is, then go ahead, feel free. Stick with looking at only this and not looking at anything else. On the monthly, we don't have to worry about that because that's on June 30th. That's more than a week and a half away. That's actually 2 weeks away, so wouldn't pay it any attention. But the short call over on the JP Morgan caller is down at 59.05, so you do what you want. So let's get on to this. I have the crude oil futures up on waiting for the futures to open up, which is going to be in about 9 minutes, so we'll get to that when we get to that. Over on the regular futures, here we are looking at it how we are not oversold as the way we ended there on Friday. However, we did not take out the overnight lows on the NQ, the ES, or the Russell 2000. We did take them out over on the Dow Jones, and there appears to be a little bit more bad news that's been coming out from Boeing, so we will have to see come Monday morning any kind of impact that is there over there on Boeing itself. But as we had here, the A move to the downside, then that B move, which was already drawn, which works out, so a C move for this to complete and be the bullish wave 4 that everybody wants would bring you down right around into that 59.06. We know already what 59.06 on the SPX is significant of, because we have traded it over and over and over and over again for a consistently long period of time this year and last year. On the Russell 2000, again, 3 red closes in a row, so I would be very cautious about being aggressively short for something to be moving down into that IWM 207 area, which we'll get to in a minute here. But futures are there. Actually, I want to put the futures back up so it makes it simple for me to get to them. So I will bring you on to the charts. We got about 6 minutes before the markets open. Futures, and we'll start you out here on SPY. Again, looking at this from the April bottom, the bounce, the second bottom over here in April as the 1, 2, the Fibonacci spiral having almost been perfect at 59605, where we expected to see that we would start filling these gaps. We didn't. Instead, we got that 3% dip, the repump Trump, a fake print down here at 578.43, and the move up here into the 600s. Doesn't matter. But as you can see, we are still holding right above that 59.68 over on the SPX, the 59605 on SPY, which was your May 19th Fibonacci spiral high, your first major alarm level. Come over onto the SPX and we have our full moon perfectly placed right on time. That full moon is not perfectly placed until we get into Wednesday and Friday of this week. Whereas if we take out the lows that we already have going into Wednesday or Friday, then we have a full moon top. If we do not take out the lows, but instead take out the highs, then we have a full moon bottom. So the full moon, like I've shared with you, is one of 20 technical indicators that you can use to go out and prejudge, but just because something happens on that specific date doesn't make a difference, which is why I've said for years now, when it comes to this full moon and just how ironically perfect it works out to be with the market, go back and do your own research on it. But as I have shared, with all of these moves to the upside, here, right after your big October 2022 bottom, 20% move to the upside, 9.21% drop. 21% move to the upside into July of 2023, the near 11% drop into where Israel invaded Gaza. 28.29% move up into April 1st over here, and then you had the smallest dip of them all, minus 5.9%, right on down there to April 18th. 2 weeks, boom, boom. 14.46% only up in here into July, once again July, and then a 9.7% drop, which you all know as to why, because it was the yen apocalypse. Your big move over here in September, and then your completed move off the August lows for 20%. 20% from the August lows into February 19th. We are up 25.32% over the course of less than 50 trading sessions. So make your own decisions as far as what you want to do with that. But we are sticking here with the Elliott wave that we have been working and tracking and sticking with, because bullish or bearish, you still have your warning levels. And until you flip from one side to the other, those are going to be what your warning levels are. So we'll zoom in on this a little bit. And here we go. Coming on to that 57.6741, where we were denied any further downside move thanks to the Trump pump. Big gap down below that. We've got our 1, we've got our 2, we've got our 3. We are expecting that our 4 is going to be holding us here right around that 59.06, right around that 59.13, right around that 59.21. That's what we are expecting, that we are going to be holding that. Like I've shared, we haven't had a minus 5% drop in forever, but just in case, brings you right back down there to that 57.67, and you see all of that info in your email. Come over here onto what I watched constantly on the day. One of my windows is where our gaps are. Where our gaps are, what our significant pivots are from different periods, different times, and here we are up in Floaty Modi Joe. 58, 59.86, 59.68, 59.86, 59.68. We played this months and months and months. We've got a gap over here, like again, from that 57.67, we've got that big gap down here. Oh, sorry, that's way down here. We have this gap over here from, when is this, a week ago, Thursday, Friday, which I don't know, and I don't care why it was created, but we've got our gap over here at 59.38. The old plus 25% year-to-date in 2024 to pivot at 59.31. The February 3 tariffs weekend low at 59.23. And then your 2024 close, where the SPX goes negative once again, right around that 59.06 area, with the 2024 close at 58.81. Can it do it? Well, you've definitely got the space for it, because in the wider view of how everything is, I'll go back to that in a minute. In the wider view of how everything is, you've only got a couple of gaps. Where are we? No, I don't have my gaps on here. I've got my gaps on here. you've only got a couple of gaps to be filled down here. And again, just to put it into the bigger, broader perspective of it all, here you had your plus 1,028 point move, 20% from August into COVID, 5-year anniversary of COVID. And here we are, plus 1,224 points, 25.32%, of course, 50 days. Let's zoom it out just a little bit more, again, for perspective purposes only. And coming off of the Israel invades Gaza bottom in October 2027, up here into April the 1st. So November, December, January, February, March, April. 1,161 points, 28.29%. We are up, once again, 25.32%, 1,224 points over the course of less than 50 days. Make your own decision on that. Over here on the QQQ, again, up 33.4% over the same period. We are still bullishly looking at this as a 1, 2, 3 with a bullish 4 bringing us down between 511 and 504. Futures have just opened up. I want to go over onto the crude oil chart because I'm interested in it. That's the VIX, that's not the crude. And here we are, and fucking nothing. We are back to Friday's highs. Nothing whatsoever. Where are we over here on the futures? Gap ups and nothing. Small gap ups, but nothing. Still red. Where are we? Yeah, minus 20. Minus 20 points on the ES, minus 80 points on the NQ, minus 159 points, as was expected over there on the Dow Jones, and minus 9 points on the Russell 2000. So, yeah, buy the dip, people. Buy the dip, because all in all, it's all just dips to be bought. And we'll get back on track here. So, the QQQ. We got our 1, got our 2. Off of that minus 33%, 30%, 35%, whatever drop it was, down into April 7th. Here is our extended ending diagonal 3, if you want to be as bullish as you want to be on this. Boom, boom, boom. And our bullish wave 4 is expected to take us down to 511, 506. And after that, we go up to 550 before we get any kind of move to the downside. Hope it works for you. Over here on the bigger, broader, wider view, zoomed in, like I said, a little bit of a move down, lower to fill the gap from last week. For an A wave, a little bit of a bounce upward for a B wave. It's quad OPEX. And then the completing move to the downside would bring us down to that 511, 506, as long as we don't break down below 506. 506, 505, we break down. We go into this unfilled gap from the China pump. Then there's a little bit of a different story that's on, which is the story that I've been talking about for a little while. On the Dow Jones, 1, 2, 3, I can see now is being completed. Now the bullish wave 4 dip, and then the bullish wave 5 bounce back up to all-time highs when, I don't know, fill in the gap as to how your bullish catalyst fits in there for the July topping. And so here on your IWM, like I shared on the IWM, I see it as 5 completed waves to the upside, but I did share with you there is a fractional possibility there is one missing wave before you get that move to the downside for your dip. So stick with it. But yeah, unfortunately, that's all that I got. Crude, very big letdown on crude. Very, very big letdown on crude. And as far as we go for the futures over on the ES, yeah, looking like a big fat nothing burger. So I'll leave you off with the VIX. Like I shared with you over there on the VIX on the weekend and on Friday and in your email, 2102 is a major, significant factor. Huge factor. And when we are up here already in the 21 area, this is not the kind of place that you want to be buying any kind of single legs. So Wednesday coming up, FOMC meeting, Day off on Thursday, gonna make a little bit of a a little bit of a barrier as to predicting for Friday on OPEX Friday. But OPEX Friday, don't wear any green shirts on OPEX Friday. I can tell you that right now because it's pretty much already written in stone. I wish you the greatest of Sundays. I hope you enjoy every single bit of every minute that you are awake, and I hope that you are awake for Monday morning to be able to watch what the European markets are doing prior to the US Open, because the G7 is going on and we're going to get trade talk pump all week long. Enjoy yourselves.
So I was right.